Yo, 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 yo. Monday, March 4th, 2019. Let's go! Hey, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you. Traders Way sponsor these webinars that I do every single day, Monday through Friday, here at the Forex.Today YouTube channel. And they've empowered me with the responsibility of helping you become a successful Forex trader as soon as possible, which still may be blood, sweat, and tears for years. However, with your success, hey, you become a better client, right? Why? You trade for years and years and years and years and slowly grow your lot size. So it's really a symbiotic relationship, and that's how Traders Way looks at it. They want you to succeed because that's also in their best interest. So maybe consider them for your as a partner, so to speak. Symbiotic relationship. So thank you for the likes and subscribes and the comments and all that kind of stuff. I appreciate that. I really like the feedback. Thank you for leaving suggestions of what currency pairs to cover. So today I'll do dollar pairs, yen pairs, gold and oil. And anything else I can cover today, I will try to do. So where do we want to start? We can start bearishly. So yen strength against the euro. Cool. Right on the first trading week of March. Very interesting. We don't know if it's euro weakness or yen strength. That is something to take note of. How'd the pound fare? Well, it ended Friday down, it popped up, and then made a downward move here on Monday. So not as bearish as the euro yen, but definitely not bullish. That's interesting. This is 4 hour. I'm going to move them all to 30 minutes. Aussie yen is more similar to pound yen, where it's more down than up, but not nearly as down as the euro yen. But look at this, lower high, but also M3. M3 London Open. Okay. What's the theme? Yen strength. CAD. Pachow. Yen strength. And Kiwi yen. Well, some yen strength. I wouldn't call it bearish yet, but it's certainly not bullish yet either, right? This is where you'd want it to be bullish, but we'll see. There's plan A and plan B for bulls. Now, how have we been discussing possible yen strength this week, this month? The point being is, even if you did expect it, this isn't quite it yet. Like, don't get all excited. But the potential is certainly there, right? Yes. So that's interesting. It's interesting. Yeah, what's up, K-Star? So is it the birth of the yen repatriation? Yeah, maybe. Yeah. You can see it's all there, right? So what are you going to do? Well, it's still not quite bearish yet. Okay, so like, for example, if you were a bull, this was where you wanted to buy. Just like this, if you were a bull, this is where you wanted to buy. If you were a bull, this is where you wanted to buy. Okay, if you were a bull, this is where you wanted to buy. So we're still in the green zone. Okay. But if you're a bear, it's definitely sell zone time here, and that puts you topish, right? Okay. That's the exact price you were hoping for over the weekend. Cool. So don't get all excited yet, but it's there. You got the ingredients. What's up, K-Gap? Thank you, Kevin, for subscribing. Welcome to the family. Okay, so anyways, just want to point all that out. It's there. Don't drink the Kool-Aid yet. But it's there. Thanks, Kev Dog. No, Alex, it's literally Japanese yen going back to Japan. So in that case, it's more of a demand issue than supply. Okay. But the point being is, we talked about yen strength soon, like today, this week, next week, that kind of thing. For the last 6 months, we knew, or we had this plan. So now we're here. So it really comes down to, how do you carry out your plan or not carry out the plan? But I did describe it in great detail 6 months ago, 5 months ago, 4 months ago, 3 months ago, 2 months ago. So it just comes down to carrying out the plan or not. And of course, we don't know if it's going to come to fruition. So just throwing money on the table is, stupid. So it comes down to your analysis and when you make your decisions. Well, right, Assam, do you remember what we talked about? We talked about the one thing that would stop. Because like the remittance. The remittance didn't stop. So what would offset the 2.65 billion, the effective 2.65 billion? Because bear in mind, in relative terms, the 2.65 billion is a drop in a bucket. So it's not going to make a big wave. So what's the counter wave? What's the bucket? US dollar. Yep. So there you go. Now, it's still early in the month. You have one last shot there if you want to use technical analysis, but remember, it's not a technical trade, so yeah. It just simply didn't move the market because if the dollar, see, in a normal functioning market with decent macroeconomics, the dollar's weak anyways. The dollar should be weak all the time if things are good. And things are not that clear. In fact, I think the dollar's weak, but everything else is weaker, which is really kind of a funny thing. I give you examples of sort of like my life, my neighborhood, my town, and all that kind of stuff. A few months ago, I went buying furniture. I went furniture shopping. I walked in and Calvin Klein couches and chairs and stuff. And I'm like, oh man, these are beautiful. Went to go find my wife and show her these Calvin Klein furniture, which ain't cheap, right? And I get there, someone bought it. I'm like, what the? Some woman just came up. She's like, I love it. Boom. Bought it. Like right there, sight unseen. She hadn't even sat on it. I was the one that took all the time in the world, went to find my wife in the store, right? And so I talked to the manager, and he's like, yeah, this stuff goes, man. It goes on. We put it on the floor. It's gone. He's like, you got to get here early. And he's giving me advice. I'm like, what are you talking about? He's giving me advice because they sell stuff as fast as they possibly can. Then I gave an example. I bought a custom golf cart. And I live in a city that has a couple hundred miles of golf cart paths. So everyone has golf carts, and kids take golf carts to school. People drive golf carts to restaurants and the grocery store. It's a really neat place in the world. And there's lots of places here that sell golf carts, but I found that they're unbelievably expensive. And they're selling. So one time I'm looking at a golf cart, and as I'm looking at it, another family came in. They're like, yeah, we want to buy this one. I'm like, I couldn't believe it. So I found a place on the other side of Atlanta, like an hour and a half away. And I got a decent deal, not an amazing deal, but a decent deal. And I said, hey, can you deliver it? And he's like, yeah, it's going to be $200. I'm like, $200? I'm like, well, I mean, he wasn't even interested in negotiating, doing that for free to sell us. So I talked to him, and he's like, yeah, they put the golf carts out onto the floor, people buy them. Right? I was going to buy a BMW the other day. I drive out to see the one I wanted with all the nice features, all the upgrades and the self-parking and all that kind of stuff. Get out there, it was sold. He's like, you're not quick enough. I'm like, what the? Are you kidding me? So we're living in a world where, Americans are rich and they're spending their money. So in that scenario, when you're buying, Calvin Klein furniture that's made in China, trust me, it's made in China, so on and so forth, trying to buy a German-made car, and they're selling them fast. Like, you got to run out there quick with a bag full of money. I'm like, I'll take it. Just please give me a car, right? Like that, in a world like that, the dollar is weak. Because we're buying stuff, I'm sending my money to Germany. I'm sending my money to China. I'm sending my money somewhere, okay? And that weakens the dollar because it floods the market with U.S. dollars, right? So I think the dollar is weak, right? No, credit. Not necessarily, but generally not. I don't have a car. You're so funny. I said I was going to buy a car, like this was literally 2 days ago. That means I didn't have a car, but it wasn't for me, it was for my wife. But anyways, so in a world like that, when Americans are spending money, the dollar tends to be weak. And then we look at the dollar in the foreign exchange markets here, and it's not that weak, but I think it's because other things are also weak. Right? So that's interesting. So that means we don't have good global macroeconomics. It means the U.S. economy is doing well and everyone else is mediocre, right? So it makes our life a little more challenging. Generally, you have, let's say, all economies doing relatively good or all economies doing relatively bad, right? So therefore, if everything's relatively good, you know, commodity currencies are doing well and all that kind of stuff, and funding currencies are weak, and it all works out. So right now it's sort of weird. It's a little bit gobbledygook. So it's a little more difficult to find trends, I think, yeah, which means you just need to be more patient. Yeah, yeah, you're right, Zamo. He did say that. Is it? Well, it's not bad for traders. It just means trends are harder to find. Or what starts to be a trend ends fairly quickly because we don't have the consistent data. So like, for example, we got to be careful in scenarios like this. Okay. Or I think isn't it USD yen at a 5-year high? Something like that. I think it was USD yen. It's not quite there yet. So we can mark some of this stuff. This is 2016. I guess you could even go do this, right? So for example, as we get closer to the yellow line, it's more and more likely to revert back down. Right, so anyways, the market giveth, the market taketh away. So anyways, we'll leave it at that. I don't necessarily like trading USD yen. All right, let's go back. So that's right. So that's what that means, right? Is that it's harder to get long sustained trends because a long sustained trend would be one is fundamentally strong, the other is fundamentally weak, and both for the same reason. Okay? And it's hard to get both these days. So anyways. Or maybe it was gold. You know what? Gold was at the 5-year high or something. No? Somebody said something the other day. I guess maybe it was 5-year high. I guess it could be. So with that, what I'm trying to get to is as you reach highs, it's more and more likely to revert back to whatever mean you're using. So I've been calculating mean averages, so like a moving average, variance between them, and standard deviation, and then correlation between this and this, and I guess if we're doing this, it'd be between gold and dollar. I wasn't doing this; I was doing it for school, but then the correlation between two things, right? So I'd measure the mean, the variance, the standard deviation, and the correlation, all on Excel. I'm like, cool, I'm a currency trader. And I think next week we're going to be doing regressions, mean reversions and regressions. Pretty cool. No, Kevin, your analysis, your strategy is based on the 4-hour. Then you drop into a 15-minute or a 5-minute to do your tactics. Okay. Nice little trade here. Look at that one. Gold coming back down. Beautiful. All right. So where do we go? I gotta find something to do here. Where should I start? Let's start with oil. You should go and love yourself. And if you think that I'm too old and known. All right. What do you want to do? I see bulls living here. I see bears living here. So bulls live, where's the, bulls are actually here, a little higher up than typical. Okay. And then way down here, but that's not likely because of where it's positioned. So this is the bullish zone. Okay. And this here is where bears are. Okay. And notice how they took it on the first day. Okay. So bears are eyeballing prices way down here. Now, I remember talking about to get that, we're going to need the stock market to fall. We're going to need the bond market to rise. Okay. Well, one of the things that caught my ear this morning is the yield on the 10-year. For about a month and a half, right, the 10-year yield was 2.65, actually a little bit less. And then this morning, it was 2.75. What does that tell me about the stock market? If the yields are rising, what's the stock market likely doing? If yields are rising, what's the stock market doing? Dude, you're all wrong. Did I say it backwards or something? If yields are rising, what is the stock market doing? If yields are rising, the bond market's falling, so the stock market is rallying. Stock market's going up. Holy smokes. Boy, we haven't covered this in a while, apparently. Holy smokes, look at 1, 2, 3, 4, 5, 6. Like the first 9 or 10 answers were wrong. Holy smokes. Holy smokes. All right, well, I apologize. They don't do this at my university, but it's my opinion. When the whole class fails at something, it's the professor's fault, not the class. Yeah. Must just be a Monday, like, really? Yeah. All right. Well, I guess we got some work to do. Yeah. So anyways, that caught my eye. But one of the things we talked about is that the way that a lot of pivots were set, it looked like there was going to be a quick rally up to start March, in the stock market or associated markets, and then perhaps a pretty steep decline towards the end of the month. So maybe that happens. I don't know. But watching bond yields is, I think, the best way to do things. Yeah, Ed, but the thing is, don't listen to Apple. Just because they can't make a decent product without Steve Jobs doesn't mean the whole economy is collapsing. Okay, so anyways. So is gold going up in the next year or down? You guys ever challenge yourself with questions like that? How about 5 years? What makes gold go up? Inflation or fear? What's most likely to happen in the next 5 years? A rapid increase in inflation or a rapid increase in fear? There is no supply and demand, Sultan. Well, where do you think, Sultan, where do you think supply and demand comes from? Jewelry demand, electronics demand, dentistry demand. But really what moves the market, greed and fear and all that kind of stuff, right? So that's what we're talking about. Where is the demand going to come from? You could talk about supply. The interesting thing about gold, well, how about this? If diamonds are simply coal that's sat underneath a mountain for a million years with intense heat and pressure, and the coal turns into a diamond, where does gold come from? What is the natural process of making gold? Again, if diamonds are just simply coal that's crushed under heat and pressure under long periods of time until they become solid, where does gold come from? What natural process creates AU? Type in a question mark if you don't know. No, where does it come from? Not how do you get it? Made by God. Well, everything's made by God, Jen. Thank you. Pharaoh's got it. It's actually exploding stars, not falling stars. Exploding stars. Gold doesn't even come from our planet. It was not born on Earth. It was born from an exploding star. That's where the heat and pressure to collide all the different things together to create it comes from. So we can't make more gold. There isn't a process on Earth making more gold. There's only so much gold. And so, yes, we have to go out and find it. But supply is, you can't say it's constant, but it's fairly steady. Yes, the Big Bang, or something close to it. Yeah, Pharaoh, you're almost there. Yeah. Not a falling star, but an exploding star, yeah. But basically the Big Bang or something close to it. Okay? So gold supplies, yes, we mine more every day. We pull a little bit out, but there's not a lot of it, right? Is it fusion or is it fission, Brooke? I think it's fission, not fusion, because it's the exploding part. But anyways. Supply is fairly steady. It's not steady because we are finding more. But whatever gold you're buying has probably been bought and sold 1,000 times over. Is it fusion? Fusion. I'd have to think about that a little bit longer. Now's not the time, I suppose. So it's going to come down from demand, and even demand is fairly constant unless there's a global crisis or something. But you need to put gold in your teeth. You need to put gold in your computers. All this kind of stuff. Demand for jewelry. Okay, that's going to be well, it's a normal good. So when your income rises, you're going to buy more of it. So that's going to be tied to wealth. So that's going to be tied to macroeconomics and all that kind of stuff. And so you can count on that pretty regularly, all that kind of stuff, right? So anyways, it comes down to why do we want to hold this stuff? And in particular, a futures contract or the physical, you know, bar, so to speak. Is it fusion? All right, thank you guys. I thought it was fission. Fission, not fusion. But I got it. You Googled it. That's cool. Okay, so anyways, in the next 5 years, I think there will be a recession. I don't think we're there yet. And there are a lot of key indicators that you can look at, which, of course, people in the newspapers and TV don't take the time to actually research. I'm sure there's a few smart ducks out there, but they just don't work in media. So anyways, it's coming. It's coming soon. I think, the icebergs are out there, but the ship hasn't even really left the port yet. So we got a couple of years yet before that happens. But in 5 years, I think we will hit the iceberg and our feet will be wet. So in that case, I think that will happen before we have rampant inflation. And so, because the interesting thing is, maybe that next recession creates the future rampant inflation, but because we're going to count whatever mistakes we made in the last recession, we're going to magnitude those mistakes. So anyways. So right now, I'd say range bound, and we're at the top of the range. That's all right. Where do you want to call the bottom of the range? How about in there? And just wait and see. Just, buying here would be, I think, a little expensive is all. Just leaving notes to my future self. Zamo, I've been blaming Europe. China does what it takes. China's doing a fairly good job, I think. There's a reason it slows down, they do stimulus. And they're trying to clean up their economy and all that kind of stuff. Like, they're trying, right? Europe is just absolutely screwing itself over. And I think it's their socialist form of capitalism that's doing it. So again, I don't need to get into a debate of what's good or what's bad, but Europe has chosen a more socialist version of capitalism, which means there's a higher redistribution of income, that in of itself creates higher levels of unemployment. That's why now that the economy's now that the recession is 10 years old, France has 12% unemployment, Spain has 12% unemployment, Italy has 12% unemployment. Why? Well, that's as good as their economy is ever going to be based on the decisions they make. Now, Brexit, that's not that's not a natural problem. That was a problem created. So when you throw these things in there, the UK, the EU, and then Italian debt problems and stuff, like these are just things that the good people of Europe have created for themselves. Yeah, no, you don't have to look at that. So I'm not trying to get into that, but that is what's creating the problem. You may remember that probably 6 years ago, China was considering like $1 trillion stimulus. This might have been 8 years ago. And I made a call. I said, hey, China, don't spend the money in China, spend the money in Europe. Because if Europe is saved, then that's going to help China. And then if China is saved, that's going to help Australia and Canada and so on and so forth, and Brazil and any natural resource exporter. Kevin, in simple terms, just look at it as a contraction in economic activity and prolonged, like not over 1 month, but let's say over 3 or 6 months. Keep it that way. Alex says, should rampant inflation come after all of this? The answer is maybe. So it comes down to, for example, productivity. In the United States, everything gets cheaper every year. So that's not inflation. Okay? For example, go buy a TV. They're so ridiculously cheap. It's unbelievable. So that means prices are falling. Okay. So right now the world is still deleveraging. In particular, the rest of the world is still deleveraging. I think this is actually a big problem, and I don't know if we have even time to get into this, but I think this is a big problem. I think what's happened is the Western world is run out. We've run out. There's a lot of things going on here. White people don't have babies. That impacts population. When you're doing things like what creates productivity, you have to look at your population, the educational level of your population, how much technology that they're creating, literally how many hammers, literally how many workers, all this stuff gets put into productivity, and then there's an output, and you can change the slope and all that kind of stuff and calculate these things. And this is what economists do all day. But basically, if you don't have babies, the economy gets old and it slows down. Okay, we've also leveraged up because 30 years ago we ran into a productivity problem. So we just bought more technology, we bought more machines, which increased productivity. That increases output, that lowers prices, and we became more productive that way. And then when it slowed down again, once again, we borrowed more money, we increased our technology, we increased the skill levels of our laborers, we outsourced a lot of stuff, but we created productivity. And then the internet revolution, once again, we ramped up, leveraged up. So here we are in a world, and we cannot, under current technology, create more productivity. It's a real problem for economists. Like, there is no productivity in the Western world. And just like go to France or Italy, like there's nothing going on there. And it really comes down to the population size and how unbelievably productive we are. But there's also levels of debt where you're going to service your debt more than you're going to service your machines, which means your machines are going to become obsolete and start becoming even less productive. Meanwhile, you still have to pay off the debt because you borrowed money to buy the machine, but now you're still paying for the machine, and the machine's broken, and you can't afford to fix the machine. And what happens is the whole entire economy, if you think about it that way, just cannot get better. And I think the United States and Europe are very close to that, really just cannot get better. And one example of that is the new generation, if you will. I don't know if it's millennials or the Y generation just before them, but this generation of America is not likely to do any better than their parents. Since World War II, it's just been taken for granted in America that you work hard at your job and you be very entrepreneurial. And as long as you're working hard or you're being very entrepreneurial, your kids are going to be better off. And that was a big deal. And then the next generation are like, okay, we're going to own our own house, and we're going to send our kids to college, and we're going to have an all-electric kitchen, and we're going to own our own car. We're going to have a new car in our driveway, and we're going to drive across America in the summers. And, and then the next generation came along, and women are going to work, and all this kind of stuff. And just slowly over time, we've had all these situations where the next generation was always better off. Okay, and now we're at this point in America where mom and dad are educated, mom and dad have good jobs, but mom and dad are still paying off school loans. Mom and dad have a 30-year mortgage, not a 20-year mortgage, not a 15-year mortgage. They don't own their own home, they're bank loans. So now there's 30-year mortgages. They have credit card debt, right? They're leasing their cars or borrowing money for cars, which is like the dumbest thing you could do with money. And now their kids are needing to borrow lots of money to go to college and all this kind of stuff. And they're already starting with debt. And they're not any smarter than mom and dad. And even worse, they feel like they're entitled. So I don't feel very good about the future in that sense. Meanwhile, you go to a place like India or China, and they feel like if they work really hard and they're very entrepreneurial, they will send their kids to college, they will get a better life, but they're willing to work hard for it, right? And that's kind of interesting because now it's like China and India are where Americans were 100 years ago. You don't hear about Americans like banding together to work hard, to focus on a thing like, oh, we can do anything as Americans, we can do anything together, we're the, right? So it's very interesting. I think you're going to see that in other parts of the world. Of course, I can say that because I'm Canadian, right? So, and I'm a global economist, and I like actually economic history. So I'm just trying to figure out where we are in economic history. And I think that's a lot of the problems where American economists are working on these problems. Like, why are we just not as productive? Is there an error in measuring productivity? And I'll buy some of that as well. But I just think maybe America's as rich as it'll ever get. Okay, I think maybe it's topped off, and then there's going to be, over the next 100 years, a redistribution of wealth. Yeah, Com says, Wayne, there's corruption in an economy, let's say Africa, blah, 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 blah. The rest of the world's going to take over Africa. Sorry, Coms. There's going to be a big war. There's going to be a big war. It's going to come down to a huge scarcity of resources, and there's going to be some people that have and need, right, or have, let's say Africa's beautiful natural resources, and then the rest of the world is going to need. So as soon as China and America and Europe go into a 2 or 3 year drought because of lack of water, bad pollution in air, all this kind of stuff, and all the crops start failing, there's going to be a big scramble for things like food and water and other natural resources. And Africa is going to have a ton of it, and the Africans are going to be in the way. But hopefully that's not for another 100 or 200 years. But I think it's going to get messy. So I have this theory, just 2 or 3 global droughts in a row, 2 or 3 years of global drought in a row, all hell's going to break loose. Total chaos. Cities are going to collapse. Governments are going to collapse. Chaos in the streets. Life or death. It's me, right? Me taking care of my family and your family's in the way. Whoa, whoa, whoa. It's going to get ugly really fast. But hopefully not this year. Hopefully not this year. But there's Wayne's optimistic. But yeah, I'm telling you, Africa. Yeah, it's got so much. Someone's going to want it. Yeah. You know, it's actually, it's a very sad thing. Like when you visit Africa as a foreigner, you walk in, you're like, this place is great. It's so beautiful. The people are so nice. The food and culture is amazing. And then everyone's raping and pillaging each other. And it's just madness. And then you're like, why? And no one can explain it. You're like, why is it all so corrupt here? Why isn't it richer? Why, you know, and all of a sudden it gets ugly. Nobody wants to talk about it. And I think at best, people just kind of chuckle. They're like, yeah. It's a devastating thing from an outsider. It's probably, you chuckle about it in front of people and then you probably cry about it silently. You know, I don't know. It's what in a, and I mean, and I'm just talking about South Africa, which is probably one of the the greatest country in all of Africa. So what do you do when you're in middle of nowhere, Africa? How do you fix it? It's crazy. Kyle's like very uplifting. So anyways, I love talking about economic history, and particularly when markets have topped out. But, you know, just look at some of these lines in the sand. We're at key areas, like at the very least, you know, you shouldn't be buying this. At the very least. I guess we don't need to be weekly here. Okay. Have any of your opinions changed from before? No, this is still lower high, lower low, lower high. So this is doing everything we talked about last week and the week before. So it's just like you're either setting these trades up or you're not. And that's not up to me. That's up to you. Yeah, Jan, and that's pretty straightforward, right? That's how you do it, right? Harley, like I studied universal basic income at Harvard, and yeah, it's interesting. It's been tried a few times in places like Canada and Finland, and well, Finland didn't really give it a good effort, but anyways, it's been tried. Actually, Canada gave it a good try a couple of times. You'd be surprised, but it didn't have the political will. The government changed and it was shut down. But I don't believe in it just fundamentally. So I've written at least one, maybe 2 papers in regards to, you know, the secret sauce is not democracy. The secret sauce is entrepreneurialism. In fact, I think democracy is probably a weakness. I think capitalism is much more important than democracy. But anyways, this idea of a more just capitalist economy, I've actually written on that, and under what conditions and what rules of engagement would you have a redistribution of income, and what were the specific goals of that redistribution. And so I've written the whole paper on it. You know, things like paying for a parent to stay home and raise children, actually receiving an income from that. Yeah, so I have pretty good ideas outside the scope of our webinar. All right. So anyway, so yeah, so if you're a bull, you should probably get ready. Get ready, because this ain't funny. There's a plan A here. There's a plan B a little bit lower. So that means if there's a plan B, it's probably going to drop down into here. So that would be an M3 to M1. So let's say you're a bull, but it's not going to be a bullish bull this week. It's going to come down into this, and then it's going to pop up, and then the following week work its way up. So that would be a plan B, because plan A is right now, right? Up, down. So that's how if I was planning to be a bull here, I'd have my first plan here, I'd have my second plan down here. And it'd be like sort of buy it this week, and if that fails, I basically buy it on Thursday or Friday or next week. Okay. Which sets up a pretty straightforward bearishness. The bear zone is here. The monthly pivot's here. So I'm going to try to squeeze a couple of things in there. So this was Sunday's trade plan. So if you're a bear, that was your Sunday move. And that was pretty easy. We don't know if it's going to pay off, but that's the pretty easy plan. Well, Banda, and everyone else too, like here's the thing. All of this is generally a problem if you are in the bottom 99% of humanity. If you work, let's say you're 40 years old or less, and you decide you're going to spend the next 25 to 30 years doing Forex, you will pull yourself above the bottom 99. And no matter good, bad, or ugly the world gets over the next 25 to 30 years, you'll be able to take care of your family. Right? And all the bad stuff that happens to everybody else, you'll read about it in the newspaper or watch it on TV. Meanwhile, your butler will bring you your breakfast. Another cappuccino, sir. Yes, Jeeves, that would be lovely. Make sure you use the organic milk, Jeeves. Quite right, sir. You're like, hey, honey, there's riots in the street again. Ooh, my cappuccino's too hot. Yeah. But that's it. I mean, like, that's why you should be here. Forget about the yellow Lamborghini. Buy yourself opportunity. That's what Forex is all about. And if you want to change the world, you can't do it if you're underfunded. If you're undercapitalized, doesn't matter what your intentions are, you're not going to be able to do it. You're going to have to go out and beg, borrow, or steal your money, but you can't do anything if you're undercapitalized, aka poor. So if you're like, oh man, all this speech about Wayne's doing about capitalism, it sounds so horrible, he sounds like a monster. What I would do is I would change the world. I would make the world a better place. Well, then get filthy, stinking rich and make the world a better place. But you can't do it when you're poor and crying about it, right? So make some money trading Forex. If it goes up, it goes down, it goes sideways. Right? Yet, actually, trading FX is totally recession-proof. In fact, trending markets are where you make most of your money. So when the financial crisis first started to hit, I built a golf course in my backyard because the yens were moving like 1,000 pips a week. And we joked about it. So when the bulldozers were out there cutting the greens, I named it the Japanese yen. That was the name of the course. Doesn't even make sense. But put the flags in, chow, and it felt really good. I'm like, the yen bought this. That's all I knew, is the Japanese yen paid for all of this, and it was fantastic. Right? So I don't know what Mike's talking about, but think about this. When everyone is in agreement, markets trend. When they're in disagreement, they move sideways or they're rangy because they're battling. That's too high, that's too low, that's too high. And they're trying to find sort of a medium, right? Which, of course, they never stop at because it's always overbought or oversold. So I don't know what this Mike dude is talking about, but just think of it this way. Like, there's no scam to it. If the Japanese yen is strong because global macroeconomics are crumbling and people are paying back all their loans and they're deleveraging, the Japanese yen just gets strong, so you buy the Japanese yen, which means you're selling euro yen, you're selling pound yen, you're selling Aussie yen, you're selling Kiwi yen. It's quite straightforward. Okay? So it's not like a sales pitch someone's giving you. That's what actually happens. So Mike, dude, I don't know what you're talking about. So if something like that happens, and you're saying, is it recession proof? Well, you're more likely to do better in a recession. Right? Or if there's the opposite of a recession, there's a global expansion, you're also going to do very well. And you're doing the same things, just on the same pairs, but you're just doing the opposite. Now you're like, well, Wayne, what are you talking about if it doesn't do? Well, I'm not talking over a period of days. If the global economy is improving, we're talking for a couple of years, 3, 4, 5 years. Or if the economy is contracting, there's going to be 3 or 4 or 5 years where you're making that trade. So it comes down to risk on or risk off. Right now, we're kind of in a sideways market. Like, the U.S. economy is booming, but everything else is not booming. So we're we're not at all global positive or all global negative, right? So to me, scam or not scam, that's so silly. It doesn't make any sense. This is a global financial market that's been functioning for 100 years, right? So if you understand where we are in all these different cycles and what kind of economy we are globally, remember it's global because in Forex, everything's relative. Is the dollar strong? Well, I think it's weak, but it looks strong right now because the euro sucks so bad, because the pound sucks so bad, because the Aussie sucks so bad, the Kiwi sucks so bad, right? So that's kind of what we're caught in. What's the trend? Well, there should be better trends, but we're in this mediocrity environment, and that's what it's going to be like. I don't care if the global economy is collapsing or if it's rising. I prefer rising because all my other investments, like my house, like, for example, go up in value. I'd rather have that. Okay? But recession proof, yeah, while everyone you know is losing money, you will be making money. Right? For example, I made an offer on my house. It had dropped by, I don't know, 30 or 40%. I made an offer to the bank, and they said, how dare you insult us like that? Right? Absolutely no, that's insulting. Get out of here. Well, a year later, it was still for sale, so I went back to the bank, and I offered 20% less, 15% less a year later, and they said, yes, thank you. So how do you get filthy, stinking rich? If you wanted to buy a yellow Lamborghini, how do you do it? Well, first of all, you get really, really, really smart. You really, truly understand global macroeconomics and business cycles. You plan for them. Remember, I planned for the real estate crash before it happened. I sold my stock equity portfolio before the stock market crashed. right? Sold the house before the real estate crash. And I mean weeks. I was timing things to Fed meetings, and I told everybody about it 3, 4, 5 months before it happened. I told everybody the day I was putting my house on the market and selling the stock portfolio and moved to the other side of the United States. My wife is still nursing with a new baby, and we had a little toddler, but we sold everything, got the hell out of California. These are all true stories. And then during this recession, doing things like buying houses for cheap. Well, why were they so cheap? Well, there was no credit, so you had to have cash. What do you mean cash? It was fucking cash to buy a house. Someone that knows what they're doing. That's how you do it, right? You plan things ahead. So recession proof only if you're smart. And that's what I'm teaching you every day is like, how do you put these things together on a daily and weekly basis, but also sort of quarterly and annual cycles and seasonality. But then there's business cycles and larger, super cycles and recession proof. Yeah, if you have brains, yes. But what if you have brains but no money? Okay, so that's what I'm trying to say. Like, then it's a waste of brain. So I would like you guys to develop these skills of learning how to trade currencies, learning global macroeconomics, learning about central banking policy, because then you can follow the same economic indicators they do, translate the same information, and basically ponder the next move the central bankers are going to do before they do it, and understand how that's going to influence the market. And you can make decisions like sell your house and your entire stock portfolio and get out of Dodge a month before the entire market collapses. Hey, did it, done it. Okay, I bought Apple at $6, Bank of America at $5. It was so straightforward, but you have to know what you're doing. So that's where I prod you and push you every day is learning the ropes and understanding. Me putting you into a euro dollar trade is so boring, right? I think what's going to change, like put it this way, this is just price action if you're going to short it again, right? Boom. Cool. Now, taking that trade, if it makes you money, it makes you money once, right? Understanding why these markets are moving, how to think outside your chart, how to think of yourself as a trader, as an investor, as the guy from Billions. If that's what you want to be, then you have to think a lot different than scalping a 15-minute chart for 20 pips, right? Mike, I don't even like people saying stuff like that. So just change the tone, Mike, because what you're talking about, first of all, is unethical. Second of all, it's violent. Third, it has nothing to do with working hard and creating plans and taking on risk. It's not a joke, though. So I'm just saying, I'll say it once, okay? Just you're in my office and you're hanging out with my people, my contemporaries, my comrades. Let's keep it professional, okay? That's all. Cool. I know. I'm clear. I was polite. I was clear. Cool. So anyways, yeah, so I would like you to develop skills so that you can take care of your family is where I'm getting at, right? But where does one for fundamentals? Well, Zamo, central banks, okay, central banks make the decision of money supply, right? So central banks, we'll call them C banks. They control money supply, okay? Should I put supply underneath? Okay, so money supply. And what does money supply do? Well, you either have lots of it and it's easy to get, or right? Easy. or there's very little money and it's difficult. I hate putting it. I'm going to put hard. Hard is not difficult. I say this to my kids all the time. I just don't like the word hard when you actually mean difficult. But anyways, it's difficult to do business if you can't get any money. And so how do they make the decision whether money should be easy in their economy or difficult in their economy? What, right? Well, they look at economic indicators. Okay? And you could look at like housing, retail, business, like ISM, inflation, like CPI, so on and so forth, right? Even government spending is going to be in there. Like the government might spend less this year, right? Right? Anyways, but it all goes into there. And when you start looking at housing, we'll do it that way. When you start looking at these things, you're like, how's the housing market right now? It's sideways to down, but I'll put sideways. Retail, sort of sideways to kind of down. Business, they're actually doing quite good. Inflation is actually flat. Government spending is up. You know, when you start adding to that, and you get a report card, sort of like your kids get what, a B minus, a B minus, an A plus, a B minus, an A plus. You start adding it up, and it comes out the economy in the United States is getting a B. So how should the central bank react? Do they want to try to get an A, or are they happy that we're above a C and a D? Whatever, but they look at this to decide, they look at all of this, to decide what central bank policy they should have. Should they increase money, the supply of money, or should they decrease? Okay? And once you understand that, why they would do it and how they do it, and then the reaction of them doing it or not doing it, you simply put it into a trade. Okay? How do you pick recessions? Oh, that's easy. How about a vacancy rate? Let's do it that way. How should I do this? Okay, the real estate market. Okay, guess this should go down a little bit more. Okay, and this is a cycle. So like this drop will eventually lead to this drop, which leads to this rise and all that kind of stuff. And then you have to look at like the 5-year average and all that kind of stuff. I don't know if I'm going to draw this right. I haven't thought about this in a while, but let's do it like this. And it's not a 5-year average, I'm sorry. This is an 8-year average of vacancy rates. Vacancy. Okay. So here's this idea that no, sorry, I have to do it the opposite. Occupancy rate, which is the opposite. Occupancy rate. Okay? How many apartments are available, for example? All right. So people are renting more and more apartments right here, but we're below the 8-year average, so rents are still low. Okay? But we're in a rise, so this is a good time to buy real estate. Now we're above the 8-year average, and above the 8-year average of occupancy rate, which means now rents are going up. At this, when you cross this line, this is when real estate start building. New apartments. Why did that not occur lower? Well, because there was still lots of availability. There was more empty apartments here than the 8-year average. So why build something new, especially if rents are low? So we'll say this, we put low rent. This is a high rent. Okay. Now think about this. You might be saying, Wayne, why are you talking about these rents? Well, we're talking about the economy. Think about it like, what happened in the economy if rents dropped here and we were below the 8-year average of vacancies? Occupancies. So there were lots of empty apartments and rents have been falling. Is that a good economy or a bad economy? Is that economy in a recession or is it recovering? Well, you can figure all this out using, in this case, occupancy rates to figure out occupancy rates, and then from that you can figure out rent prices as a form of supply and demand. And how do you predict the economy is going to crash? Okay, all this kind of stuff. This will help you. So anyways, here they are renting old available apartments. Then all of a sudden, there's a lack of supply because now you're above the 8-year average and rents are going up. So you've lacked supply. But think about all the people in the real estate business. They're like, oh my God, occupancy rates are falling. Rents are going up. Let's build. Let's build. But it takes, what, 3-4 years? Let's say 3 years to build something. So they're building more here. Goes up. Rents keep going up. Okay. So they're building more and more. So in year one, new apartment buildings hit the market here. Year two, new apartments hit here. 3, right? And meanwhile, they're building new ones and building new ones. But there's a 3-year lag. All of a sudden, you get to a point where, for whatever reason, because along here, interest rates are rising and all these other things are happening, along the way, things start to cool off. Rents are too expensive. Okay, occupancy is still falling, but you notice this? Occupancy rates are falling, but rents are still going up because you're still above the 8-year average. Ha! And these idiots that were building brand new projects here and here, they're building new buildings, they're still coming online, and they're going to keep coming online regardless of what happens because of the 3-year lag. And they were building new buildings when rents were up, but occupancy rates were falling. Okay, so all of this can be a clue. So you'll hear like rents are at a 10-year high or something like that. You'll read this in the newspaper. And you're like, I couldn't give 2 hoots about that. Why? Well, what's important is occupancy rates. Occupancy rates are falling, but rents are still rising because you're above the 8-year average. But where's the trend, right? And more buildings are coming online, and you're going to enter this point, okay? And you go through this cycle, and this is a 13-year cycle, as you probably know, okay? So how do you predict? Well, for example, you can use the real estate market and the 13-year super cycle to figure out where we are. And it gets impacted by the business cycle because somewhere in here, people are starting to lose their jobs. Interest rates are too high, so on and so forth. And they're starting to move to new locations or going back home or whatever. But because we're still above the 8-year high, rents are still high, they haven't reflected a crash. So by the time rents start to fall over here, it's too late. And these idiots they're going to lose their buildings. Because they think about it, up here is when they took out their loan to build all these new projects. So now they have a $20 million debt at 5% and interest rates are falling like crazy. Occupancy rates are dropping. Property values are in the tank. Now, how do you service your debt? You can't refi if you have a $25 million loan and your apartment building's now worth 15. You're $10 million in the hole and you're locked in at a high interest rate. And guess what happens? bankruptcies, and all that kind of stuff, and people get crushed. Meanwhile, your financial advisors calling you like, just ride it out, don't worry about it. You're only down 40% of your entire net worth. Don't worry about it. Like, don't worry about it. You should have known about it. You should be making money. Because there's plenty of things to do in that period to make money. For example, you should have sold the stock market up high, buy the bond market down low, right? Move to lots of cash, so then you can start buying $25 million brand new apartment buildings for 15. And then because there's no credit, you're going to have a lot of cash on the down, so you can do all that. And you're buying stuff cheap when everyone else is lining up selling you stuff. Yeah, Kev. Yeah, the fundamentals course. So anyways, someone asked me, can you predict recessions? Oh my God, that's so easy. Yeah. So I didn't prepare that in advance, but I hope that was understandable. Okay, let's move over to the Swissies. There was a lot of stuff on the Swissies. Oh, right on, Azabu. Yeah. Currency correlations are very important for show. Pound Swissy? Sure. NP? No problem. And do I have it here? I should do here. I usually have it here. Why can't I find it? Pound Aussie, pound CAD must be in here somewhere. I thought it was higher up though. Aussie. Oh, there it is. Got it. A little slow today. So anyways, I hope somebody found that interesting. Oh. But based on my analysis of that chart I just showed you, I'm preparing for, I think it's a 2022 crash. Yeah, sure, trade. Cool. Get info? Right on. See, I like this. The economist in me likes it. What you now about Agenda 2030, they want change all system to more slave. Now this will affect you. Wow, I have no idea what you're talking about, Mike, dude. Oh. Cool, lots of thumbs up and stuff. Well, Jimbo, I don't want it to crash in 2020 because I get my second degree in 2020. So the worst thing to do is get a degree into a crashing market. But all right, so pound Swissy, pretty straightforward in the sense that if you're a bull, your entry was here on the Friday/Monday move. If you're a bear, this is a sell. So that's pretty straightforward on a weekly basis. Now, I think where you're probably the trick with this analysis, let's say, is if you're a bull, you actually want to buy it down here. And so buying it here is straightforward, except you still think it's overvalued. And that's the problem, right? So you kind of need bears to get involved. So you look at this, and this was plan B. I drew this out for the swing trading group. We had, actually, this was plan A, I'm sorry. Plan A was sell here, plan B was sell up here. Is that right? Maybe I'm thinking a different currency pair. Anyways, it's there if you need it. Because what you kind of want is you kind of want this to come down and then sort of work its way up. You know, it also comes down to, like, remember, this isn't technical. There's fundamentals behind everything. So let me ask you something. What's the stock market going to do in the next 30 days? Okay. And the way you answer that question will dictate what happens here. And I don't know the answer to that any more than you. But if you're not answering that question first, you really have no idea what's going on. Now, you might be trading technically and stuff, but you don't know why it's working or why it's not working. So I'd rather focus on the why. Okay? So if you say stocks are down, then you will be selling here. Okay? Now, if you said stocks up and you sold there, you just don't know what you're doing. Okay? If you think the stock market's going up, that's your plan A. This is your plan B. Okay? I just planned out your entire week for you in less than 1 second. Be careful. Don't say crash. Rather, you say you're expecting a pullback in equities. A crash just sounds amateur, right? So I got to change your language. I want you to be a professional. So the target, Mike Dude says, oh, I clicked oh, it moved. Sorry, Mike, view deleted message. I didn't mean to delete it. It moved while it was, oh, now it's gone. Oh, no, there it is, Mike Dude. 2880, so you're taking it downtown. 2880? That's a weird number. Why would you say 2880? I'm okay with you selling it, but why 2880? Or in this case, 2888. Doesn't have to be GG, but in this case, yeah, I'm using S&P 500. Hey, Emil. Come on, Mike. Why 2880? I don't see anything down there at 2880. Maybe you got long term out there. Okay, hang on. Oh, I think I see what you're doing. This is probably 2880. No, that's 2980, 20. Maybe I just can't see. Maybe I don't have my glasses. I can't read. Where's 2880? Let's do this. I'm going to put a line here. And then I'm going to change the properties. See, I can't even see that. 1.28880, I think is what he said. All right, I see. You're doing this too. So, well, okay, I don't agree with that. And I'll tell you why. Okay, this is set up off the M3. So you should have the more conservative target. So I'd go M1. If we were down here, Mike, and kicking off this one, then I would go for there. Okay, I believe I see what you're doing. Okay. I'd say you're just slightly too aggressive. I'd consider can't even see that. 29.50, I guess it is. I'd be very concerned, especially with all that support there too. Yeah, so it's a risk off is all it is. Well, NP, the way you answer that is like, it depends why it's doing it. So if pound Swissy falls because the British pound collapses, that doesn't necessarily have anything to do with USD Swiss franc. I mean, it could, but there's a difference between causation and correlation. It'd be more causation. Now, if the Swiss franc is strong across the board because of, let's say, a total risk off sentiment, then the correlation, yes. Although you have to be careful in that situation, the dollar's likely to be strong too. Okay. Hey guys, I just realized I babbled on for an hour and a half today, but I only answered your questions. So I think we'll pull the plug here and just resume tomorrow. But so yeah, it seems like it was a little bit of a distracted day, but again, I was only answering questions. So what did we learn? How to predict recessions in an economy using maybe a non-traditional method. Yeah. Some of you guys had questions about fundamentals. So like in the fundamental course, you'll learn about what money is and the role of intermediaries in an economy, like banks. And then it moves on to you actually managing the balance sheet of a commercial bank, because that's very similar to how a central bank will manage their balance sheet. So that goes into that process. And then, hour 5 and 6 and 7 and 8 probably have all to do with central banking policy. And then we go into specifically the Fed and the FOMC. We even have a guest presenter, Ben Bernanke, gives a speech for us in there too. So, if you want to learn more about fundamentals, and I encourage you at some point to do it, you might consider the fundamentals course. But make sure, don't just buy like the fundamentals course. There's in the download link below, when you download the MT4 charts and stuff, it gives you a discount for the all courses, all videos anyways. So you might want to consider that, and just because then you get you get a bunch of other courses as well. So you might want to consider that. Without further ado, thank you very much for being on my team. Thank you for being a client of Trader's Way. Thank you for being a subscriber. Make sure you click the Forex.Today logo to subscribe and watch the 4,000 other videos on YouTube associated with my work. Peace on earth. May the pips be with you. May your profits be above average. See you tomorrow. Cheers.